Hello, everybody. Welcome, welcome. God, these stalls are high, aren't they? Jeez, thank you all for being with us for Founders 500, session number 7. We are taking the Joe Rogan approach of just numbering the events. So at some point, we'll have some milestones, which will be super cool. In terms of today, as with all of our events, we're aiming for nice, relaxed, chilled, informed and informal is what we're looking for. In terms of that, I've got some pre-prepared questions. I'm hoping there'll be some time towards the end where we perhaps field some questions from you. So we definitely want it to be relaxed and fun. Can we turn the music down, Maddie? Thank you. So what we're going to cover? In terms of today's session, bear with me, caller. We are looking to cover, we're going to take you on a journey, no less. And what we're going to start with, we're going to talk, who have we got? Who have we enticed to come and share their opinions with you all? We're going to then dig into who gets funding, who gets backed. We're aiming to cover how to pitch, when to raise, how to access capital, what good capital looks like, and then some questions from you, and we're going to leave with some takeaways. So
4 hours.
in 4 hours. Again, anyone that's been to a previous event will know I'm quite ambitious when it comes to these things. But we'll see where we go. In terms of that, if you don't mind, I'll come down the line. I'll start this end, actually. You've got the microphone. This is Carmela, everybody. Carmela. Apologies, I'm off to such a good start. It's going well. You'll see, I don't get flustered. Carmel, please, if you could give us an introduction.
Sure. Hi, everyone. This is very weird. I'm Carmel Raffaelli. Can you hear me? Okay. I call myself a recovering entrepreneur, although lately it does feel like I fell off the wagon. I have done brick and mortar fashion, e-commerce, hospitality tech, shifted to climate and sustainability about 6 years ago, and did IP tech and collaborative tech. And 3 years ago, shifted to the investor side. So I'm an angel investor. I do very small tickets. It's 2 meetings, 2 weeks, 2K. I invest quickly and widely. I have invested in 38 companies in the past 3 years. Nearly all of them are women and nearly all of them are climate. And I also do LP tickets into funds. And I had a community for co-investing in women, building, and climate.
Amazing. We'll dig into the community. I love that. We'll pass down to Jem.
I like the way you hesitated slightly.
Oh, man.
You lost your mojo with the names already.
I've definitely been thrown. We're turning the music off, I believe. Oh. Why?
I'm pretty loud.
Shout. The mic isn't.
I think this is just for YouTube.
We have got a mic. Bear with.
I'll introduce myself. So I'm very loud. You won't struggle to hear me. My name's Jem. I'm the founder of Daring Capital. We're an impact investing community. Our mission is to invest in overlooked founders building businesses that make the world a better place. Before that, I was a social entrepreneur myself. I founded something called the Bike Project, finding bikes to refugees and asylum seekers, which I ran for 10 years. I'll come on to what we do later. I'll hand over to Dan.
Hi, everyone. I'm Dan. I'm a dirty venture capitalist. I invest in industrial. So I invest in physical AI, construction, energy, manufacturing, supply, all of the non-sexy things that go on behind the scenes. That's what I invest in at the early stages. So pre and seed, whatever those things now mean, I have no freaking clue. But average ticket size is about 1.5, 2 million quid into post-product, sometimes pre-revenue, B2B, smart, clever, very technical people doing clever shit. Before that, 15 years angel and built and sold 4 businesses. So I've sat on all sides of the desk. I'm 53 this year. I can't believe how fast time has gone, how bloody dare it go so quickly. And I'm deeply passionate about getting more women into the ecosystem. So even though as a VC firm owner, partner, I see very little female deal flow. I coach 30 women on the other side to try and get them to fundraise. I'm very passionate about getting more women into startup, into investing, into venture, so we can start to neutralize the shit. So I just want to share one story. This was something that a founder did to me a couple of years ago, and I thought it was genius. So I was engaged in an investment conversation with a solo founder. I couldn't invest for a reason I won't go into because it's boring. So we were speaking. I said, look, I can't. This isn't quite the right strategy for us. So what he did, rather than the usual, so when I say no, when I said you'll get 99 rejections for every 100 emails that you send or phone calls that you make. Rather than saying, who do you know that would be interested in investing in my business, which every founder does when I say no, they go, well, who do you know? Don't put the onus on me. What this guy did, which was bloody genius, he went to my LinkedIn, he found 3 investors that he wanted on his cap table. He said, I know that you know Billy, Susie, Johnny. I've written a personalized email for each of them with a teaser pitch deck. Do you think they would be open to a conversation with me? So rather than who do you know, which just becomes ghosting because investors tend to not respond to who do you know that would invest in my business. He did the hard yards. He did the homework. He asked me, because we'd interacted, I said, well, she wouldn't be, but these 2 would be interested in speaking to you. I forwarded on the email with the teaser, which took me 10 seconds. And he closed his funding round in 6 weeks just by turning the no's very proactively into yeses. And I just thought it was bloody genius. So I highly recommend, don't say to an investor when they say no, because most will say no, who do you know? Go through a version of that and open the network in really smart and clever ways.
That's a great one.
Thank you. Grab that down.
And no, VC isn't changing, just to fight, because we fight like cat and dog. And I'll tell you why it's not changing, because it can't. There are more women coming in. There are different types and different flavors, but they're not venture capital. So there's VC and there's VC. There's VC that masquerades as incubators, accelerators. There's VC as hedge funds. There's VC as PE. There's VCs as sovereign wealth. There's all kinds of venture capital that's not. And there's great, because this is great, there are other funding models, and we were talking about them in the back room. There are all these other different types of funding models. And the other thing is, all of the women that work for me are much more brutal than me. They're much harder. So it's all very well being male or female, but just keep in mind there's also masculine and feminine. So I think there's just something just to keep in mind.
Thank you. I'll grab that, yeah. Oh, you got more. I should have sat in the middle, shouldn't I? And then I could have intercepted the mic on the way back and forward. I think one thing that was interesting for me there is, you invest in different types of companies, different stages, different deal sizes, all that type of stuff. I think one thing that's come straight across is, like, do your research. There was a bit of don't spray and pray. There was a bit of spray and pray. I think one thing that I'd love to hear from you is, like, where do your deals come from? What is it that turns your head? Is it a couple of paragraphs? Is it an intro email? Is it actually, here's a link to a whole load of stuff? So where do your deals come from, and what is it that turns your head when it first lands in your inbox?
You want to start?
So, because we're pretty niche, and because a lot of people spray and pray, honestly, if it's coherently written, if it looks like decent and it like actually fits our thesis, I'll look at it, right? And that's because I get, like, I don't know how much stuff that just isn't. So that, I think, is like key. And if you surface that quickly, so I'm not like reading 3 paragraphs before I realize that, like, what it is and why it fits. So, like, Kamel's right that actually, like, spraying and praying particularly with angels, can actually work on LinkedIn. I don't know about maybe funds as well, but it's certainly with angels, people do that. But if you can surface if you don't do that and you're more specific, and you can surface quite quickly in an email or in a LinkedIn message or in a, whatever it is, that you fit our thesis, this is why, this is how you're going to generate, make the impact and the returns that we're looking for. That already shows, like, a level of thinking that the majority of people that contact me anyway don't have. I will.
I have large company, so people inbound. I'm like, no, but you need an email signature. Would you like me to help you? So do you ignore all the people that may be trying to make it? Personally.
Yeah. So I will. I don't respond to anyone that isn't eligible. So if you,
No, but thank you.
I get too many. I also just think if you spray and pray, it's just like a mass generator anyway. Like you're not individually going through them, and also like if I'm not being funny, but it's all on my website. Like if you've not been even bothered to read the website, I'm not going to kind of go through. If you have made the effort to like look at whether you're eligible or not, and that's clear enough to me, I will respond.
If you're not eligible, but you have made the effort, like, do you ignore?
But how have you haven't made any effort if you're contacting me and you're not eligible?
Someone right here we go. But like when someone like does something, do you go like for me? I go, love that you tried. Do you want my services because you're not very good? I'm like something, but not in a rude way. I reply to every single person.
I don't think you have to. Like, I think what you're saying makes a lot of sense, doesn't it? Like,
I don't.
The information's there.
I get lots.
Between one of them will be a good person or something.
I'm not sure.
But they didn't pitch it properly.
I'm not sure I follow exactly what you're saying, but I don't.
You don't waste your time.
Do you want to take it?
You don't waste your time.
Okay. So if it is an all-male team that is doing cyber security, I won't answer them. If it's a female founder that is doing a sustainable fashion brand, I will. Yeah. It's still not what I would invest in, but I will make sure to give a reply. But things that are just random emails, we don't have the time to get back to it.
I'm the same.
I think now I lost the original question. But I was just
what turns your head in terms of that inbox?
So for me, the matching and the understanding of what I'm doing, I do try to flip very quickly, 30 seconds, if there is a deck or a one-pager, for two reasons. One is to see whether I'm missing something that's just not presented properly, but two, to understand what's going on out there. So I will go through a few hundred of decks a week to just make sure that I have visibility and I can keep in mind that few people are doing different things. Also, because the table is a community for co-investing, our goal is to try and help match as many investors into these deals. We're non-commercial, we don't charge for this, but it really helps me to see what an investor sends me to better understand how they're thinking and what different founders are sending. Yeah. So for me, the deck, a short deck, a few slides, is really, really useful. And I always, of course, for my specific investments, will look at the team.
Amazing. Makes lots of sense.
One quick just thing to add, I don't know what the other two do. If you're like in stealth or you are building something in this space, I probably won't like look at it, take a meeting. Like I would need to see, the minimum I would need to see is like a deck or something that says what you're doing. I'm not going to take a meeting without that. I don't know. I imagine you guys
makes sense. So. And from the VC side, Dan, is it slightly different to you? Do your deals come through your network, or
they do? Most VC deals come through network because it's old boys network, of course. Everything that these two have said, I totally endorse, even on the VC side. So personalize your emails. So I've just given you a warm tactic around turning the warm ended up into being no's into more conversations. That's on the warm side. The other thing on the warm side, which is like the people that you know, you will all have an iPhone, an Android phone with a contacts database, or maybe a CRM from an old business, or maybe some old contacts. Even people that are outside of your domain, I reckon the 6 degrees of separation because of the social web is more like 2 or 3 degrees of separation. So just in the 50, 70, 100 people that you have in your contacts book, tell everybody that you have any kind of relationship with, regardless of their walk of life, what you're doing. So send them a, hey, just stepped out of corporate hell. I've decided to set up this incredible new business. I'm doing this. I'm telling my loved ones, my family, my friends what I'm doing. When you come across people that look and smell and sound like this, just keep me in mind. So just tell everybody. On the cold side, and you'd be surprised at what comes through the warms. You'd be really surprised that guy you met in the gardening center that was doing something random in your swimming pool 5 years ago knows Barack Obama, I don't know, whatever. But you'd be surprised at where these connections come from. So just getting it out. There's something also about putting it out into the universe and kind of manifesting this stuff. I don't know if you believe in this stuff, but I do. There's something about this positive universal energy. On the cold side, colds work. If you just personalize, if you are thoughtful, if you've been to the website, if you understand the strategy of the angel or the VC, then colds do work. I've seen a 10% reply rate to cold emails from founding teams, and I work with hundreds. I get 15 to 20 pitch decks a day. I coach 30 women a week, so I get lots and lots of stories about how it's working in the real world. Colds work, but you have to do it in a thoughtful way. You have to personalize, understand the strategy. And the only other tip I'd give you is work your list backwards and work in cohorts. So work your CRM, get 20, 30, 50 of people that you want on your cap table, and then work that list backwards, because they'll be the golden gems. Do those last, because then you can waste all your fluffy lines on the ones that you want, but you want those ones more. So work your CRM backwards. There are loads of databases online. There's one that I really love called Scribe Labs. I don't know if you've come across Scribe. Run by a guy called Rob Cousins, lovely human being. He's built a tool that scrapes LP6 forms on Companies House in the UK. You might be saying, what the hell is an LP6 form? An LP6 form is the investor, that is a form of record of the investor that invested in that business. So go to Scribe. I think they charge 80 quid, 100 quid for an access something. If you want to, go there and you'll be able to search through their database of adjacent businesses. So use it, look at all of the companies that look, smell and sound like yours, find out the angels, the funds, the whatever, the grant, all the money that's gone into the adjacent businesses, and then work your CRM that way.
Fantastic, man.
Is it 100 quid a month, is it? They can, yeah. They also have a service for you, and they've got some really fascinating female founder stats. So the women that use the network do much better than the men. Interesting. So yeah, it's yes.
I was just saying. I mean, if there are these investors who are already investing in companies that are similar to yours or potential competitors, would they invest in you?
No, if it's direct, then there's probably a conflict. For angels, not so much, but for VCs, they tend to like. Also, we've got such massive egos. We've invested in the best lot. You're shit, because we've got the best one. So there is a conflict. Yeah.
Amazing. Thank you, Dan.
Maybe, sorry, just a word about angels for a
Please,
second.
yeah, of course.
So angels usually huddle together. Most active angels will have it out on their LinkedIn that they're angels. Most of us also will write who we wrote checks for, so you can see what we like, what industries we're touching upon, what kind of events we talk in. There are local, very local angel groups. There are larger regional, meaning European or US or global angel groups. I think when you look here, UKBAA will have a good list of the different angel groups, syndicates, and so forth that are running and operating in the UK and what their focus is at. For women here, we have Alma Angels, which I'm part of. We do small tickets, but we can make a lot of noise and help you with the very early stage parts of your round, whether it's a pre-seed, seed, or an A. There's also C Ventures that have a syndicate, Hermesa that have a syndicate. So we have a few syndicates that are focusing on supporting women founders, mixed teams. But there are thousands, I think, of groups out here in the UK, and it's really easy to find us, and people allocate quite a lot. So it's worth for the early tickets to spend time on it.
There are about 5,000 angels in the UK.
You won't get this back, I don't think, at this rate.
Weirdly, I think my
yeah,
lapel mic has now kicked in, so I'm
Oh
going.
wow! Okay,
Yeah,
you don't
crack
need it
on, crack on.
Just one thing I wouldn't, that I'd say isn't my experience, at least. I have a syndicate of I think we run 40 odd investors. I don't think any of them have it on their LinkedIn. So there are a lot that do, but just because they don't have it on their LinkedIn, that doesn't mean they don't invest. If they on Scribe, whatever, there's quite a lot of people that do it on the quiet because they don't want to end up on people like us.
And they would be the larger tickets usually.
Yeah, they would often be the largest tickets. The other point I just wanted to make quickly.
But then your syndicate is, you can find the syndicate on UKBAA.
Exactly. Yeah. You can find the syndicate. Yeah. So the other point I'd make quickly is be really careful about like the world of like brokers and middlemen in this space. There are like I can't count the number of like horrendous stories, even from like there's a big platform out there that's like pivoted now that I've got some like horrendous stories from. I think there probably are some good brokers out there. I don't know. I've never met them, but I wouldn't say like never hire a broker, but I'd say like the big red flag is an upfront fee. So
No, never hire a broker.
do you think never hire a broker?
Never
hire a broker.
Selling your own
I
business.
agree.
Never
Yeah.
hire a broker.
Yeah, I mean,
I feel very strongly about it.
I agree. I
Interesting.
actually really agree. Period.
Interesting.
Give me the mic back.
I've never met a good. Yeah, I don't know what's happening. This is weird. They're agreeing. I've never met a good broker, and I've heard some horrendous stories about brokers. There was a story in Sifted. I can't remember his name.
Ian Slater. No,
that's the LP. There's a different one. The poor founder that I met lost a load. Jamie Johnston lost a load of money on. I've forgotten what it's called, but anyway, they're all. I'm on a founders WhatsApp group, and they're just like, it's honestly just horrendous story after horrendous story of like taking your money and running off. So just like avoid.
Be careful, eh?
And
makes no
that's
sense.
a great point. Founder groups are the best way to find your first tickets, because usually angels, it's not that competitive, especially the ones that do the smaller tickets. And a lot of the founders would introduce you to angels that they like, that have been supporting them. And so these kind of communities where you meet more founders, where you can talk to them. For VC world, some people are more protective, but for the angel world, people would be very generous with their introductions if you are collaborative as well.
Amazing. I love the way.
Just one very quick thing. Ask if they have money.
Oh yeah, who's deploying? That's also for funds, by the way.
You know, ask if they have money. So when you are you deploying? Do we fit into your portfolio? It looks like we're a fit for X, Y, and Z reason. Would we fit into your portfolio? Do you have cash to deploy? You must ask. Do not ask. You're there for money. So you must ask.
And particularly for angels, what recent investments have you made? There are a lot of people that like to think and feel they're angel investors without ever deploying any cash.
That's true for funds as well.
Get references. No one ever asks for reference. I'm a noisy bastard, but no one ever asks for references on me. You should absolutely reference your investor.
Love it. I love it. There's been absolutely some gold come out in that last bit there. That was perfect.
We're warming up now.
We're there. We've fixed the mics. We're getting there. We're getting there. It is, yes. Yeah, watch it back.
I forgot about that when we started.
Dan actually went, is this online? And then he's like name dropping people he don't like. He's not messing about. He's not, we could bleep it. We'll bleep it. I think that it's really interesting, actually. We're on session 7, and your point there, Dan, about like talking it out there, it's almost like increase the surface area for luck. You're letting people know. And we have had that mentioned in 3 out of 7 sessions now. Like, definitely do it. And the work, the CRM backwards, I'm definitely doing that. I've a couple of times I've bagged perfect meeting and I've fluffed it. And I'm like, if I'd had a couple of practice ones under my belt. So yeah,
literally
thank
pitch
you.
Everyone you know. Go to the opening of an envelope and pitch your business.
Love it. I love it.
Just keep in mind, you're the pitch. The pitch deck isn't the pitch. You're the pitch. You, as founders, are the pitch. We're investing in you.
Yeah.
So just keep practicing. Get it out there. Get it out your mouth. You'll fluff it. Doesn't matter. Keep going. Run through walls.
Amazing. I'm going to do one more question on the deck, and then I am going to keep things moving because I have got way too many questions. You're 100% right. But we'll jump into time in the ask, when to raise, when to wait, and stuff like that next. But just in terms of the deck, you've all called out, obviously, you've looked at a lot of decks. I'd just love to kind of hear from you, like, are there things that you see wrong or right? Do founders focus on certain metrics that you're just like, this is just not important to me? Like, what is it when you look at a deck that sticks in your mind? What do you want to see?
So we have the basic structure of every deck. I want to know what the problem you are solving for. How are you going to solve it? Why you? Why now? And how are you going to make me money out of it? That's kind of the base of it. I think you have to understand, if your deck is too wordy, then your messaging isn't clear yet. you have to be able to convey, again, it's a sales pitch. You have to be able to convey what you're doing in a clear way for somebody that is not necessarily a deep expert or has the best context about what you're doing to be able to understand it. Because if I'm looking through it and I'm giving it a minute of my time, something needs to catch my eye within the context of it that will want me to give you half an hour of my time or an hour of my time and so forth. I always want to understand what your business model is. Too many founders skip that for some reason and just show me the hockey stick. The hockey stick doesn't mean anything. So I want to be able to understand who are you selling to and where and at what price are you going to sell it? And is there anyone here that does climate? No, fine. So I won't dive into those things. But I also want to have a sense that you are able to sell better than the other person and who's your competition.
Amazing.
So yeah, deck is like a funny one in this space because like there's lots of disagreement about what makes a good deck. I think if you keep the basics in like so there's a deck on the Seed Legals website. I think if you follow like a template deck that you can kind of adapt, if you kind of follow that structure, and cover all their points and follow their advice, I don't think you can go too wrong. I think, and it looks professional. I don't think you can go too wrong from that. The things I see that annoy me about decks, which are not a miles away from yours, what is it and how are you going to make money? Is like the amount of decks that miss that off, or it's not really very clear, is like incredibly high. And why you? There are like loads of decks where like there's like a team slide and it just says, Carmel, the table, Oxford University, and that's it, or something like that. So like why you is like a really important question for an early stage investor. I think if you can cover that, that helps me personally and makes you stand out. And then I think the third thing that I also find frustrating is like, and I think like maybe this comes from like accelerators or something, but like the Tam Sam Som or Sam Tam whatever slide, whatever it is,
Tam Som.
the pantomime slide is, I think like it doesn't really ever tell me anything useful. I think if you can break down for me like a kind of bottom up market size, like if you've got like you're selling glasses to bars, there are 100,000 bars, you sell them 10 glasses each. But then at this percentage of the market, you take that, and that's a more useful calculation for me than, the glasses market is worth 58 trillion, which is usually the magic number in a deck.
Thank you. Dan?
Because of my spectrum-addled brain, I think in frameworks. So let me share some of them with you and then see if any of these resonate and are useful to you. So I always think of origin to vision. So when before you open a slide with an investor, tell them the why you. Now, we've all said the same thing. It is why you, why this, why now. That's one framework, which is an overlay on your pitch materials. So as soon as you've written anything down to share with an investor, make sure you've covered the why you, why this, why now. They're the three major food groups that you have to cover. But I've mentally invested in founders before they've even opened a slide. I'm like, I get you. I get this. This is fucking awesome. And that is origin. That is origin to vision. That's your story, the origin of the thing, and the end point. Because investors are investing in tomorrow. They're not investing in today. You know too much about your business. So your natural intuition will be to tell me all about the mechanics of today. I don't give a shit. I care about tomorrow. What's tomorrow's market doing? How are they behaving? What's the world that you're changing over there? So origin to vision. Cover all of the major food groups. I think Jem was talking about something on slide B. No. But anyway, Seed Legals. There are loads and loads, and I've got one that I'm happy to share with you. There are loads on the social web of templates, frameworks for pitch decks. Y Combinator do a great one. There are loads all over the place. They're all fairly samey. All I will say is cover all of the major food groups: problem, solution, market, team, But throw in a brain harpoon. Throw in a fuck you. Am I allowed to swear? I'm not allowed to swear. I'm sorry.
Bit late.
Yeah.
Throw in, throw it,
We've been
throw
going
in
for an
a,
hour
oh
and
my
20
God,
minutes.
that's an interesting thing. So throw in a brain harpoon, slide 4. Tell the investor something that they don't know. Oh my goodness, that's funny, that's educational, that's thoughtful. Because a lot of the pitch material, I had one today, I had a guy pitch me today. And I said to him at the end, I said, Tom, just tell me some shit I don't know, man. You just basically bored me with everything that I know already. So you can be very assumptive a lot of the time. Grandma, grandpa, as soon as you've written anything down on paper, give it the grandma, grandpa test. Because I promise you, you will have at some point disappeared up your own backside. Used all this clever words and term, all these. You've got so bored of saying the same pocket phrase, you twist it, then you twist it again, then you twist it again. All of a sudden, it makes no sense to anybody but you. So give it the grandma, grandpa test. Give it to somebody smart who doesn't know anything about you. Say, read. Don't say a word. Just read through that. What is it? What do I do? Who am I serving? Where am I going? Why am I doing what I'm doing? So have a think in terms of grandma, grandpa. If you're in any doubt about anything, give it the 5 whys, which is you write a statement on a piece of paper. Why does that matter? Then you get to the end of that point, you go, why does that matter? I promise you by the 3rd why, you'll have gotten to the root wordology, phraseology that's really, really important. I'm a bugger for purpose, mission, vision, position. I see a couple of people that have heard me tell this story before. Before you write anything down deck-wise, be very clear on your purpose, why you get out of bed. Your mission, which is your next achievable thing. It's not a mission-centric business. A mission to me is a next achievable thing. It's a collection of goals. Your vision, where you're going, and your position, which is probably the most important, which is comes into why you, not them, which is we do X for Y, unlike that lot over there who do that for them. If you want that, you go there. If you want this, you come to us. So position is pitch plus differentiation. So purpose, mission, vision, position. If you just clarify those 4 things, you write them down and get them super hyper simple, grandma, grandpa, then you can go into your pitch materials and write extremely powerful pitch materials. So until you do that in an aligned way with your founding team, you'll be writing gobbledygook and getting lost up your own backside. And then Pam, Tam, Sam, Som, absolutely nailed it. Bottom up is much better. So step out your missions over time with what you're going to achieve. We're raising this to achieve that. Then we're raising that to achieve this. Then we're raising that to achieve that. Mission 1, mission 2, mission 3, mission 4. ICP 1, product 1, feature 1, territory 1, then 2, then 3. Stepping out bottom up, it gives us a much better insight in how you're thinking. It's also go to market. It's also who you're serving. It's also where you're going. It's also endpoints. It's very, very clever rather than these concentric circles of gazillion-dollar bullshit. It's nonsense. So I always glaze over when I see the Pam, Tam, Sam, Tom addressable markets. And we do eat with our eyes. I hate to say this, and I don't expect you to be Picasso, but investors, we give each slide maybe 5-7 seconds. So it's slide, narrative, flow, slide, narrative, flow. So it has to tell a story, beginning, middle, end. So how does this slide lean into the next? And it is a visual experience. It isn't eating with your eyes, even though I hate myself for saying it.
Just 2 things. One is about this differentiation. Take a look after you finished your deck. How many of your competition will have the same deck? I sat today with a founder and I told her, wonderful, but this could have been for any one of your competition. Like there is nothing special here. That's 1. 2, women out here, whatever your numbers are, triple them because that's what he wants to hear. And it doesn't matter if it's true or not, or just triple them.
Don't make it sexist.
No, it is. Women just triple. 99% of the women need to triple their numbers. Really, you have the same vision, you have the same Northern Star, and you have the same, if not bigger, drive. And by the way, statistically, also a bigger chance to get there. But he won't buy it if you don't triple your numbers. So triple your numbers.
Amazing. Thank you very much. There's some absolute nuggets in this already. We're going to be turning all of this into reels, I can tell. There's some really good stuff coming. Thank you. I'd like to jump into like when to raise, when to wait as a little bit of a topic now. So that was really golden in terms of talking to investors, having the conversations, building the pitch deck, all that type of stuff. If it's all right, Carmel and Jem, I'll maybe start with the first question to you, and then I'll come to you, Dan, for the second one. So in terms of the first question, have you got any advice for founders about when to raise, if they're early, should they be bootstrapping? Where's the value in angel investment or different levels of investment? If that's okay from you two guys first.
Quite a lot to, quite a lot.
I'm just throwing it out there.
Quite a lot to
I don't get the mic
unpack.
often, so I've got to just say it all at once.
Got to say it all at once. Where shall I start? So I'd say like we're a genuinely like early stage investor. We will invest in businesses that are, you know, maybe a pre-revenue, maybe even like have a minimal version of a product, right? That don't even have much of a product. What we won't invest in is an idea and a slide deck, right? It has to be more than that. And lots of people come to us, you know, say, well, you're an early stage investor. Here's my deck. Here's my idea and my pitch video, but I haven't actually done any work to prove this is going to work or test it or anything like that. This may sound really obvious to a lot of you, but there has to be some work that's gone into it. And I'd say more and more we're an outlier in that we do pre-revenue investing unless it's deep tech. You probably do pre-revenue.
No one who puts pre-revenue on their website does pre-revenue.
So yeah, so we genuinely do it, but I'd say for most funds, it probably isn't really it's not really much of a thing anymore. I don't know. What do you think?
Climate and deep tech will have.
Yeah, deep tech's different.
Yeah, climate deep tech, biotech, you still can do it, but you need to show traction. So traction doesn't need to be revenue.
Amazing.
I feel like I only scraped the surface of this question, but I'm gonna hand. Oh no! Did you want to hand this? Are you banning Dan from this question?
I'm not banning Dan. I've got a different question for Dan.
Oh, all right.
But Dan's happy about the question, so maybe I should just let the guy cook. Come on, Dan. Come on.
So to a certain extent, in my mind, you're always raising. That might be unfortunate, but it is.
Always be raising, always be closing.
Build these relationships, have these conversations. There's nothing better than going to an investor and saying, I don't want your money. I just want to have 15 minutes even of your time for some feedback and pointing me in the right in more direction.
When you go to events, do that. When you go to events to meet investors, say, I'm not fundraising right now, but I'm going to come for you in 6 months. Do that. Yeah. It's an incredible strategy. It works really well.
And build these relationships. And I was just at this Women in VC event in Paris, and one of the LPs told one of the GPs, the worst thing is when you talk to an investor and he says, oh, or she says, sorry, this isn't for me. And you say, okay, bye. And you walk away. Don't walk away, because you never know who this person can introduce you to. The relationships matter. The conversations matter. So ideally, you do this when you have the time to have them, and then the ask comes when the actual ask is.
On that as well.
Female. It should have been.
No, in general.
On that as well, how you take rejection can really define your reputation. Like there are like a whole chunk of founders who get rejected and rant and rave and post about it on LinkedIn, and it is hard getting rejected. Like I run a syndicate, I have to rate, I sing for my dinner all the time, and it is hard, but taking it on the chin, understanding the feedback, even if internally or to your partner you're like, that is bullshit and what a load of rubbish, is really important, because you could persuade that person at a later date. You keep that relationship alive. Don't just go cold. Don't send them a message going, you're a twat, I hate you, which has happened to me, or like accusing people of all sorts of things and this and that. That is because these sorts of things get talked about, right? That is a way to not do yourself any favors.
But if you're mistreated,
could I get you to hold the mic for the YouTube? Thanks.
Sorry, but if you're mistreated, then do talk about it.
Yes.
And talk about it with first of all, you can talk about it quietly. You don't need to go and splash it everywhere. But as we said, some people in the ecosystem are not straightforward. And this is what founders are there for one another. And especially women, but it's true for everyone. If you are mistreated, don't take it on the chin and make sure that you're creating awareness. You're definitely not going to be the only person.
Yeah. Amazing.
There's a Slack group which I'm not on. Is it Founders Anonymous or something? Do you know what I'm talking about?
Yeah.
Where like basically you create an anonymous profile for yourself, and there's just, you can search the names of pretty much every VC in the. It'd be funny to search you, Dan, and see what people say about them. And there are, there is some pretty. I've not about Daring Capital, thankfully, but I've been sent some pretty brutal comments about investors where everyone's liked it and stuff. So, not individual investors, about funds. So it is worth checking out that group to see what people say about it.
Amazing. If we go to Dan, I'm going to change tack a little tiny bit for you, Dan, actually. And you've probably already touched on it a little bit in terms of always be raising. But I think the thing that I was just keen to get from you was around timing. Like, when should people be thinking about raising? Are there any kind of rules of thumb that you see
for venture?
Yes.
So venture is great when you need fuel on the fire, when you just kind of you've got your pull, you've worked out where your pull in your market is, and there's, it doesn't have to, I think to Carmel's point, it doesn't have to be necessarily revenue that's the only key metric here, but that you've proven a market pull, and you've proven that the market is big enough to go global and to go fast. That's when venture capital comes into its own. I mean, like I said before, there's VC and there's not VC. So this, I'm talking from a very trad VC perspective. So once you're ready to fuel the fire, go global, go speed of sale, speed of scale, and you're going to go hard and fast. And it's a lonely, miserable journey doing this. Once you're ready for that, or you want to give that a go for it. You can't get off the venture track once you're on it. You will be ridden harder than Zorro once you're on the venture track. You can get on the venture track whenever you want. So if you can, bootstrap, get to some proof points, work out. We love, as an investor community, you having skin in the game. So if you've put your own money, your own risk capital, more than just time, and you've committed to a thing, and we can see that you're committed energetically, emotionally, financially, physically to a thing, that's music to our ears. It doesn't have to be all money, but money is an important part of it. What else? I think that's it on the when to raise venture.
I saw you take a few notes as well. I'm intrigued to the last point there. Actually, is there any gold that you want to throw out there for us, Dan?
Well, I wrote down money's not the answer. So a lot of founders that come to me for money, I said, you think that money is this, or me investing in you is this utopian thing. It's like, phew, that's just the beginning of the shit fest. Raising capital into your business. Okay, so you've got 3 jobs potentially as a founder. One is the content of what you do. You've become a domain expert in selling glasses. Then you've got to build a business that works out how to sell. That's a whole different thing. Content, then the business that wraps around it. Fundraising is a 3rd job. So you've effectively got 3 jobs. Fundraising is soul-destroying, shit-festing misery. So you have to learn to enjoy it. Learn to enjoy the rejections. Play it a game. Put it in the fuck it bucket. Play it as a game. It's just a game. It's all fun. Get amongst it. Woo! What are you going to say to me now? I don't care. I'm going to go anyway. I'm going to the next one. I'm going to go anyway. So learn how to enjoy the energy of understanding the psychology of fundraising, because whatever you do, this will put you in good stead. This is one of the hardest versions of sales. It's incredibly hard to get people to put money into business, but that's the beginning of the misery. Then there's a whole other world, the other side is of coming good on using that capital to get to your next mission. And then once you've got there, raising another funding round to get to the next mission after that. So it's not this utopian, phew, I've raised money, boom, I can go to Barbados and live on a bit. No, that's when the hard work starts. 80% of the time you're rejected, you're the problem. And investors will not tell you that you have an ugly baby. We don't want to tell you the truth. I will be honest with you. Most investors will not be honest with you. They will not tell you the truth. So, come back when you've got more traction. Oh, that's really interesting. You're not quite on my strategy right now. They will come up with any form of excuse to get you out of their inbox, because it's my job. My kids don't eat unless I win. So I get 15, 20 a day. I need to cherry pick the winners. I need to scrape through the rest. Don't care about you, don't care about you, I care about them. So I've got 30 bets. So this next fund is 80 million quid. I've got 30 tickets. I've got 30 bets to place. I'm going to spin the wheel. What's best in the pot right now? What's in my pipeline? It's a very full field. There's lots of people in there. Right, you, this, go, boom, done, next. And I've got 30 bets with 80 million quid. So you are not my priority. So 80% of the time, you're the problem, but it can be fixed. And you can learn the skills to be an incredible salesperson, money draw, magnet for the right investors. You all in this room are here for a reason. You've all here self-selected to go on this journey. You can do this. Even if you are the ugly baby, you can get the other side of this. You can learn the skills and you can learn this magic magnetism. All of you can, just by the very fact that you're here.
Fantastic. Thank you very much.
Just one thing.
Please, Carmel.
I don't believe. Yeah.
3 things.
The putting your own money in is a very privileged position that doesn't speak to everyone. Not everybody can do that. There are other ways to do it. It is harder to do it without being able to put your money in. It is really hard to fundraise if you also have a side gig because you need a salary coming in because you're spending so many hours building something that is not paying. But there are people that are open to look at it differently. And it is a substantial hurdle. There's no other way to put it. And privilege is definitely the biggest selector for entrepreneurs more than anything. But when you are creative, when you can think of bootstrapping, of creating some kind of revenue source, it might not be the right revenue source that you'll go with, but something that helps you just tag along, it makes a difference. And it also shows out of the box thinking, innovation. So don't leave here thinking that you have to also show this financial commitment. Not everybody can do this. And just a small piece that might just make it slightly more fun. The same roadshow you're doing, the same hoops that you're doing, Dan is also doing to his LPs.
Misery. I'm fundraising now.
And he actually understands, sometimes he forgets, but he actually understands you better than everybody because...
I'm the ugly baby all of the freaking time.
Exactly. So when you want to take a moment to commiserate or just enjoy the fact that you're not alone, the investors you're pitching to have just finished doing this rodeo or are ahead of their next or actively doing it. And it just is a nice balancing fact to remember.
That's nice to think about.
Yeah. Don't forget, it's not our money.
Oh, you don't need it.
We're the custodians of other people's money, right?
It's the wrong word.
So don't think because I hold the checkbook that there is any energy mismatch in this relationship. I'm in exactly the same boat. I need you more than you need me, weirdly.
Right. I've got 10 minutes
Sorry,
left. I've got 10 minutes left. Sorry, Jem. Can I? Come on. Sorry. I can't say no, Jem. Come on. What you got? What you got?
On your own money. Sorry, I have to come in on this point. There are, I think Dan's probably right. A traditional VC will want to see that commitment may want to see the commitment from you. We don't personally. I mean, there are lots of other ways to show commitment. From your perspective, though, forget fundraising, forget all that for a second. Like, I've personally made some pretty terrible decisions about putting my money into stuff, and I've seen founders make some really bad decisions about when and remortgaging their house and pouring all their life savings into stuff. Just be really careful about about risking like your actual money, like not like a bit of money that you might have on the side that you can afford to lose, but be very careful about risking money that you cannot afford to lose, because like there is a very good chance that it won't work out and you won't see it back. So just I think it's too much to go into too much detail about that, but I would always think very, very carefully about that decision.
Sorry. From actually an operation perspective, managing cash flow in the early days of your company is really, really, really critical. And being able to have a 6 months, 8 months view onto the future and understanding when are you starting to take risk that you cannot take on yourself is critical. And it's something that I think in the early stages we kind of try and not or we just don't talk about it as much because we're talking about the dream and the fundraising. But your day to day, your operations, what is going on out of pocket for you in the beginning or with a small fundraise, this is your lifeline. Manage it, know what is in your bank account every second of the day, how it looks like in a few minutes from now and in a month from now, because without that you end up falling into holes and debt and creditors really quickly.
Yep. Amazing, amazing. We've got 10 minutes left, and I'm going to eke out every last piece of juice that I can from those 10 minutes. I think so far we've talked about, like, you know, where your deals come from, what people should be doing to get your attention. We've talked about the deck. We've talked a bit further, and maybe we're getting to the point where actually the money's coming. So what I would love to cover just with the last 10 minutes is actually, you know, what else should good investors bring? What should people be expecting from investors? So I'd love to cover, what should they bring beyond money? But also, like, we've touched on it a tiny little bit already, but like, are there red flags from investors? Because again, I think, as you've mentioned already, they get put on the pedestal, they're the be-all, they've got the money, but there is probably some bad ones out there and there's some red flags to be aware of. So I'd like to use the last 10 minutes to talk about those 2 points, if we can, please.
Am I taking this to?
Your
Sure. I'm torn on this one a little bit. I've got like various different opinions. I'm not really sure what I think about investors getting involved. I mean, there are like, I think like this is where references come in, right? So this is, I think, the first panel I've ever seen, let alone been a part of, where every investor on the panel has experience on the other side of the table. I think that's pretty unusual. So bear in mind that most investors that you meet won't have actually run a company. That doesn't mean their perspective isn't valid, but bear in mind they won't have actually ever worked for a startup or run a startup or been in that position. I think this is, as I said, this is where founder references really are important, because investors will often say they do really add value. Some will, some won't, and some will really actively get in the way. And references are a great way of like pulling out the ones that will actively get in your way. Personally, I'm more of a kind of, we check in with founders. I get where founders want us to be very involved. I am very involved in several of the businesses, but that is because the founders have asked for that. I don't sit on boards. I don't proactively do that. I know we're pretty unusual in that way. A lot of funders will do that, but that's our approach, and that's because when I was in business, I just got really annoyed with everyone wanting to be on my board and telling me what to do. Yeah, even when they weren't qualified.
85%-ish of European VCs have never worked in startup. In the States, it's roughly 60% have. So Jem and I were talking about this outside. At the early stages, I think it is important to work preferably with investors who have experienced your side of the desk. I think it would put you in good stead. That said, I would say on balance, most investors are not value additive. Most investors will waste your time on the value add support side. It's my job to source, select, support. That's what I do as an investor. I find deals, I select who I want to invest in, then I help them grow and do magical things. Most investors fail at the support. Most people that I work with, and there is an argument as I give you the money, get out of the way. The flip of that is that even the highest performing athletes and performers of anything in the world have coaches, managers, therapists, support networks around them, and you're no different. You will need support networks around you, and sometimes an investor can take that mantle. Most of the time they can't. Be extremely careful with whose advice you take. Advice like assholes, yada, 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 yada. The best value that I've seen investors add to founders is network. So the only real value I've seen, having sat on miserable boards mostly don't work. The most value that I've seen is network. So if you optimize for anything, keep in mind there's only 4 things that anybody in the world can bring to your business. They can give you money, they can work in it, they can strategically support you, or they can open a black book. There's only 4 things in the world that anybody can give you. So you have to think as founders, what are you optimizing for? What's the magic sauce to get you from mission 1 to mission 2? Is it network? Is it cash? Is it operational expertise? Is it strategy? And that will help you contextually make the right decisions. But mostly, investors are fucking useless.
Do you sit on people's boards as a
Yes.
as a rule?
Yes.
Interesting. We invested in a startup
I don't think it's right.
that was another fund invested in and insisted on sitting on their board and populating the whole board, and it absolutely killed it.
Yep.
It's our only failure so far. But I don't know if that's a thing I don't know if that's generalizable advice, but I was just intrigued.
The challenge is my LPs insist. My LPs, my limited partners, my investors in this is my third fund. Now, the first was my money, the second was mine plus, and the third one is a little bit of mine plus lots of other people's. My investors insist that they, ESG, the G bit, the governance bit, there needs to be good governance. There is an argument for good board structures. Good boards do work. I like asymmetric boards. So you do all of the hard work, all of the interrogation before the board meeting. When you're in the board meeting, it's all value. It's all who do we know, what can we change, how do we grow, blah, 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 whatever the deep dives or the strategic objectives are. So I like asymmetric boards. Half of the boards that I sit on 10 at any one point because my brain can't cope with any more than that. Half of the boards that I sit on don't work and are value destructive for the founders. And I'm constantly trying to find ways to maneuver, sack that chair, replace it. And it's really, really, really hard. So you have to, when you get there, you have to think very carefully about board structures. It'll be in your terms, and that's a whole workshop in itself.
Amazing. Thank you. Carmel.
Yeah, so I agree.
What?
I do. Amazing. A few more things, maybe tidbits for the earlier stages of it. When you want to make sure that the investor matches you, that you like their attitude, that you like the way that they present themselves, that your dynamic and conversations are. If it is for a board seat, understand when they are exited on the board as well, and how to exit them from the board. That's another one. It doesn't always work, but try and ask them to talk to a founder they have financed and the company has failed. Because where people and investors are really important is in the hard times. You want to hear references, not about the great companies that are shining stars, but what happens when the shit hits the fan. And one very, very small thing on the wonderful vehicles of EIS and SCIS that we love here, and investors love them, founders love them. They are a wonderful tool, except for the moment where you need to decide, get the investors on board at a stress point where closing will already enable them to get their tax benefits or not. And that is, I've seen a few founders that have been screwed by their investors because of the SCIS and EIS regulations. Sorry?
Wait,
3 years, 5 I think for SCIS and
three for SCIS.
for SCIS.
I think it's 3.
Yeah. So I don't necessarily invest in the UK, but it has created a misalignment and interest between what the founder needs and what the investor needs. Now, it's not a reason not to do it, but just every time there are these gifts that come in your funding round, understand what they are and how it affects your decision making, so you know how to better manage crisis situations.
As in, you're saying if there's an exit opportunity within 3 years, is that what you're worried about?
Like if it's an exit, that's not a great exit.
That's not a great exit within 3 years, right? Got you. Yeah, that is 3 years. Yeah.
And we have 3 companies along the last 2-3 years that the investors screwed up this opportunity because of their EIS.
Lovely stuff. Lovely stuff. Somehow I've got us there loosely on time, but what we're going to do, I'm going to come to each of you like for a one-liner, if you don't mind. One piece of advice you wish every founder knew before they were raising money. And just as you're thinking about that, like one-liner, I have got a couple of thank yous that I do definitely need to do. The first one is, behind Dan, you'll notice we've got a new banner. And a lovely VC called Signal have chosen to help us out with some cash on a quarterly basis. And in terms of that, it's been really interesting talking to them. They were very proactive. They came to us. They very much want to be supporting the founder ecosystem. They specifically actually invest in the maritime space. So it's very, very, very niche, but they're coming from this place of actually wanting to give back, wanting to help. So I'm very grateful for Signal. So I definitely just wanted to give them a call out. Did Media, absolute pair of pros. So Harry and Justin, they've been sorting us out for the last few weeks. I'll hold my hand up. I got us off to a rocky start. Apologies, everybody. There was no microphone. The microphone didn't work. We now have microphones, and that is because of these two pros, and they record great content. So if you need anything to turn some investors' heads, talk to Did Media. Last but not least, Maslow's. What an amazing venue. Absolutely love being here. If you found us through Maslow's, if you could please tell them you had a great time. It would genuinely help the community, because obviously, like everyone else, they want to get a return on investment. So that would be something you could do to help us. So that would be amazing. In terms of that, I've given you a bit of thinking time. I don't think any of you needed thinking time, but if you could, what's your one-liner to draw us to a close? I'll start with you, Jem.
Ask yourself, and like properly ask yourself, whether you want to take on venture capital. Genuinely, most founders don't. I think most founders don't think it through.
But you have to know what venture capital is. Most founders don't know what venture capital really is. Really.
It's Dan.
It's all of the assholery that I've been sharing tonight. But if you want to learn about it, read Power Law by Sebastian Mallaby. He's written a book called The Power Law. If you really want to understand the machinery and why venture capital can't change, yes, we can have other things around it, why it can't change, sorry, then that will really put you in good stead, because as soon as you know the beast, then you can decide when you want to get on the venture track, or if you want to get on the venture track. Did I cut you off?
No, I was done. I just didn't.
What's your line?
I've got so many pocket phrases. The best piece of advice I was given, I remember when I first started my first business 30 years ago, a very dear friend of mine that was very successful in business, he looked at me and he said, Dan, just fish where the fish are. Don't worry about anything else, just fish where the fish are. So bloody simple. But I think my advice to you as early stage founders would be just do less for fewer. Whatever you're doing, do less of it for less of them. So that's how I think of it.
Interesting. Thank you, Dan. Carmel?
Ooh, I don't really know. I think my one piece of advice would be figure out what kind of founder you want to be. What do you want to build, and why are you building it? That will then decide what kind of money you want to get, what kind of risk you want to take, where you want to fish. But I think it's a roller coaster, whether you're going to the VC landscape or you're going bootstrapping. It is a really, really, really tough journey. So ask yourself why, and what do you want to get out of it?
Amazing.
That's purpose.
Thank you.
Your purpose.
Thank you. So good, man. So good. So I'd love to say thank you to Carmel, Jem, and Dan. Can we have a round of applause, please? Thank you all very much.